Good morning, pregame crew. It is Thursday, March 17th, 2022. Happy St. Patty's Day, 8:22 a.m. Eastern, 6:22 a.m. Mountain Time. Are you wearing green? I can see you. I'm going to pinch you if you're not wearing green. Good morning, Greg, Dino, Night Truck, Robert, Scott, Maria, Matthew, Blue Dog, Dino, Jessica. I have not filled out my bracket yet. Good call, good call. My husband's all over it, but I haven't. Fat in, Wave, Jaska, Crypto, Luciano, Young, Wave. There you go. I can get started. Chuck says it's a good. Hey, Topher. Topher, how are you? How's your trading going? Crypto 420, turtlenecks. Turtlenecks are my favorite piece of clothing. Camo monkey. Good morning. Good morning. Hope you're doing well. Hope you're not too hungover from FOMC and all of the shenanigans. Oh, you're in Ireland, Michelle. Well, happy St. Patty's Day. I am married to a good old Irishman, so I love the Irish. Bull flags everywhere. Yes, I try to help y'all make green. Yesterday was a good day. I hope it was a good day for you. I hope you sat on your hands as instructed if you are a newer trader or inconsistently profitable. And I hope that you were able to observe the market and see some awesome things. Every FOMC, I learned something. Wait, back up. I learned something every single day in the market. And that's why I love it. When you are in an industry where there's a cap and you can only learn so much, for example, I was in physician practice management. And I had a subspecialty specifically as part of my business was interventional nephrology coding and billing. And it's a book and that's it. Once you learn that book and you learn all the codes, that's as much as you can learn. Okay, here, superior vena cava, going all the different things, retrograde and all the whatever. There's only so much you can learn and it had a cap and it was very limiting and I love to learn. And that's the great thing about trading is you learn every day. And the minute you ever think you know it all, it will put you in your place. And that's what I love about trading. And I also love the self-improvement that I get every day, learning to be more accepting of all outcomes and having the mental agility to adapt. Freaking love it. Good morning, Amaka. Oil is looking great, and Joey in our room called it. Hey, Mary, happy St. Patty's Day. Good, Topher. That's wonderful. That is wonderful. And here's your friendly warning. If you had a great day yesterday trading and you were very profitable, size down. If you had a terrible day yesterday trading, size down. Yesterday was a huge event. A lot of people upped their size. Some people won, some people lost. But basically, in either scenario, I would say size down. If you didn't trade yesterday at all, then just take your normal position size. That's my opinion, and that's my advice, because it's easy to size up when you've had a big win. You get overconfident. It's also easy to size up when you had a big loss because you're trying to make that money back. Well, here's the bad news. That money's gone forever. If you make new money today, that's new money. It's not replacing the old money that's lost. That money's gone. And you have to think in those terms in order to keep your head on straight and stay consistently profitable in this trading game. Oh, Chris, I love Wicked Tuna. Good. All right, Tammy. Hi, good morning, Tammy. Hey, Matthew. All right, let me go back. Someone had a request early on, GDX. GDX had the best 5-minute double bottom yesterday. Let me go back to it right here. 3604, 3603. And I posted in the room right here. Let's look at that time, my time. So that's 12:30. So if you look down here, it's 12:30 my time. All right, now let's go look at Nugget. I traded this and I did not hold on to it well. I'm not going to pretend like I traded it so beautifully. Not what I wanted to do. Still not what I wanted to do. Come on. Right here on Nugget, 62.65, 62.67. I entered about here on that double bottom, and look at that trade setup. Now, not all trade setups that I post in the room or that I go over here are going to work. This was a 5% pop off of Nugget, which is 2 times bull shares of GDX. That was a fun trade. Now let's go back to the question. Lori, inside bar daily, slightly gap up in pre-market. Let's go look at it. Yep, we had an inside bar yesterday, so it stayed within Tuesday's range. High of 37.32. Yeah, we got a bull break. And that is the most likely scenario on GDX if we go look at gold. Gold got a bull break yesterday and GDX didn't. So with gold, no, that's not what I want. So with gold, it's a pure play. I like to call that pure play, where gold is slightly connected to the dollar and markets, where GDX is totally tied to GC, not one for one, but it is tied to GC plus the market. So GDX needs two things to work in its favor in order to move, where gold really doesn't need anything. It can do its own thing, autonomous of any other variable, but GDX really needs the market and gold. So yesterday, gold popped to a higher high, not higher high, but we broke the high of this candle of 1930. And so we broke it to the bull side, but GDX didn't. It stayed contained. But now this is a great laggard play to gold. Looking for hourly high or low. If you don't have a position. Now this is going to be the theme of the day, and I apologize in advance for how many times I'm going to say this. Back burner trades are going to be the name of the game today. Yesterday, if you would have taken that BABA back burner trade right here, it was one of the Queen of the Mountain trades. It was the trade of the day. I did not take it, and it bounced at least 22%. So back burner trades are the name of the game today. Okay, that was almost 6:30, so I'm going to get started. GDX. Perfect. Awesome. Yeah, hit that like button. New money does smell better than old money. I like it. Hey, Raw. ETH USD. I will go over that. Nadia, well, welcome. Okay, y'all ready? Hey, Jay Stevens. Well, drive carefully. Keep your eyes on the road, please. There's a big fan, Ricky. And Dustin, let's get started. I have Amazon on my list as well, so that's good. Everything y'all are asking for, I have on my list, so we're on the same page. All right, welcome to the pregame show. I'm Chart Gal Lori. I'm part of the Chart Guys community, and we teach technical analysis. We don't teach hocus pocus. We don't teach armadillo voodoo. We teach technical analysis. We teach you how to read the charts, and we give you ideas on different fishing poles you can use to go fishing with your system, and we also cover trading psychology, which is the least talked about component of trading, yet in my opinion, it's the most important part. It's kind of like when you're trying to lose weight and you have the eating part and the exercise part. 80 to 90% of it is what you eat. 10 to 20% of it is working out. Same thing with trading. I would say 20 to 30% is technical, and well, let's say 20% is technical analysis, 20% is the system and what fishing pole you use, and 60% is trading psychology. Yes, sir, folks, I said 60%, and it's a lot, and some of the things that we teach in the Chart Guys community. You can check us out on chartguys.com. And this is who I am, at Chart Gal Lori on Twitter if you want to give me a follow. And at this time, I'd ask you to please hit that like button, and I will do my best to earn that like. Looking at ES, we have a potential 4-hour bull flag. We're running into that 200 MA. If you're interested in my chart setup, it's down below in the video description. You can click on that link, and it is a PDF that has all the explanation as to why these bright Punky Brewster colors are on my chart and why I use them. I love the yellow candles, for example. Those are inside bars. They just help pop out at me. I know you can hover over them and see, is this still inside? Yeah, it's still inside. But if I paint it yellow, then it just helps me. Okay, I don't have to go hover over it and look at the values, and saves me time. So 4-hour bull flag, what is the criteria? We need to have an extension of a bull move. And then on the consolidation, we don't want it to give up more than 33% or 38% of that pole. We're well above that. We want to hold those key EMAs, and we want declining bear volume in the consolidation phase, which this is kind of cheating because overnight, of course, we're going to have declining volume. So when the market opens, we want to make sure that if there's any bear volume, that's staying contained. Contained will be the magic word. It must stay contained. So those are the elements of a great bull flag. Actually, there's one more. So let me type it out to make sure that I say all of this right. Actually, let me go over here. and type it out here. Okay, so bull flag, and you would have to just reverse it for a bear flag. Components of a bull flag, you want to have a major extension from a downside move. Well, you want a major extension in price to upside. You want consolidation to be no more than 0.38 or 38% of the pole. You want lower wicks of bulls buying dip. You want to maintain, hold key EMAs, and we want declining bear volume, back a type, bear volume on consolidation. Those are the components to a healthy bull flag. If you invalidate any of these components, it invalidates the bull flag. So right now, we're sitting footloose and fancy free. We have one little no, and that's this upper wick here on this candle from midnight last night, my time. That's the only thing that's slightly invalidating this bull flag. We do have a lower wick here where we touch that 8 EMA and they're buying that dip. So right now, my mindset is the bulls proved it yesterday. So now I am looking to buy dips. That is my mindset today. And if the bears show up in volume, I acquiesce and I back off that idea. And by the way, it's hard for me to read chat while I'm ripping through these 20 to 25 charts in 25 minutes. So we have some awesome mods that'll be taking a look at the chat and answering your questions. My RSI settings are just the standard. I'll show you. And again, you can click on the link in the video description. It'll show you my settings. So this is just the default. See, it's set to default. MA link 14. All right, so let's go to the notes. And if you're part of the TCG chat room, I copy and paste these notes when I'm done in the chart guys room in general chat, and I tag them over to TCG post. Okay, Queen of the Mountain, here's just a little definition of my slang and what I use and what it means. So last night, looking at the world markets, DAX was slightly green. Hang Seng was up 7%. So Hang Seng had the bounce of all bounces yesterday. It was just amazing. Baba, Baidu, NIO, they put on an absolute show. It was fun to watch, and even more fun if you were in it. I was not in it, so I was just smiling and waving. I had JOMO, joy of missing out, just waving at it saying, I'm so happy that whomever caught it, caught it. We have quad witching tomorrow, SPY dividend Friday, QQQ dividend Monday, so that's going to mess up your ETF charts. I only chart futures in here for indices, so I will just be looking at that. It won't mess me up. But tomorrow morning, if you own SPY, or even if you don't open on SPY, you open charts in the morning, you're going to be like, oh, what happened? SPY is down. Well, it's going to be artificially down $1.34 because that's the dividend. After FOMC, this is the most meaningful thing that happened for me yesterday, was after FOMC, the amount of dark pools that were pouring in was mind-boggling, just absolutely mind-boggling. Amazon has had its largest block buy in its history. Yesterday at $2,950, they bought $5 billion worth, 1.7 million shares, I think is what I read. Facebook, 3 billion plus. Nvidia, 2 billion plus. So it's like they showed their hand. They took their hand off their wallets and they said, you know what? FOMC wasn't as scary as we thought, and we're going to start buying. And the craziest thing was CNBC and Twitter, everybody went nuts. What happened? Like, Powell was so hawkish, and I have no idea what Powell said, nor do I care because I just trade the charts. I kind of care. I care for myself personally. If I want to get a mortgage in the future, is a hike in interest rate going to impact that? And of course, I don't like inflation in general, but they got to do what they got to do, and they're smarter than me. I'm not an economist. But either way, they kept talking about Powell's hawkish stance on more rate hikes, higher rate hikes, higher frequency. And the bears were totally taken back yesterday, and that's what made it all the more fun. If you didn't watch Dan's video after hours yesterday, the one that he put out, you can still watch it. It is absolutely amazing and, dare I say, inspirational. He talked about a lot of the components of psychology and what happened yesterday, and we talk a lot in here about the boat getting tipped. The boat got tipped yesterday. All the bears got on one side of the boat, and it was so obvious. And then the boat flipped to the bulls. So it was pretty fun to watch, and I really suggest go watch Dan's video. So we have potential 4-hour bull flags on ES, NQ, RTY, and YM. So and what I do on these shows is I go over the indices, commodities, cryptos, movers, and shakers of the day, and I take a request if I have any time left over. It's debatable. Okay. Yes, let me go give you the supports. When I look at the chat room, I know y'all can tell when I look at the chat room because I get a little sidetracked because it's hard for me to switch gears. Support 43.20, and then this becomes our most important level going forward, the FOMC low. So we're just going to call that the FOMC low, and it behaved just like we thought. We were going to get the false reaction and then the real reaction. So the FOMC low becomes the level that bulls must defend in order to take back control of the 4-hour, the daily, the weekly. They have to maintain FOMC lows. So FOMC lows are going to be the buzzwords going forward. Support 13874, and this isn't quite set because we haven't broken above the high of this candle. So it's not support right now, but it's a level because we haven't pivoted. We have not pivoted off these levels. Resistance 14022, 14025. And here's the Hang Seng. It's already breaking that resistance. So you're entering a gap area on Hang Seng. So Hang Seng is up 7%. And you could argue that this is still a dead cat bounce because on the daily, we haven't changed a trend. We've just gone straight up and we haven't pulled back and do a trend change. But the DAX, Germany, did get a trend change. They're running into resistance here. So the NASDAQ may take a breather today. I'm not all bulls all the time. It may take a breather. I'm not expecting a full collapse unless we get some unexpected news out of Ukraine. Okay, RTY. RTY, we're running into the underside of a downtrending daily 50 MA, and we broke bull out of a lot of these falling wedges that we've been talking about. We broke bull yesterday, but we are running into the daily 50 MA, and we must be aware of that. We double topped at 2037, 2038 right for now on RTY. That may have us pause a little bit. Okay, YM. YM on the hourly, we have a level of 33760, no pivot yet. We have hourly inside bars, and then the FOMC low here is 33280. RTY, that FOMC low, 1970, and then NASDAQ, RTY low, 13463. Let's look at the Fab 4 indices relative to the 200 MA. Okay, we see where NQ is. It's just slightly below the 200 MA. ES is right on it. RTY is above it, showing it's stronger. And YM is right below it. So RTY is the strongest of our Fab 4 indices. You know, MG, that's exactly what got me pumped. When he said he is going to smash that MJ run, it's like, how did we get so lucky to be able to trade with this dude? He's just like on it. So fun. That was a great video. Okay, US 10-year. I had some comments yesterday, so funny, that US 10-year is not inversely correlated to NASDAQ. Okay, whatever. So any correlation you have in the market is never one-to-one. And let me tell you, I made an example yesterday. I was trading GDX Dust early on, shorting GDX, and even Dust, which is a derivative of GDX, was not trading as inversely as it was supposed to. Nugget, which is a derivative of GDX, was not trading in one-to-one correlation as it was supposed to because it's a derivative. Nothing's one-to-one. Nothing. So is it an exact science? Heck no. The US 10-year and NASDAQ, let's just call it QQQ, are typically, they're inverse. They're going to do opposite. That's a terrible depiction of opposite. But if this is down, typically this is going to be up. But it's not an exact correlation. Nothing is. Absolutely nothing. They're always going to have little missteps. But dare I tell you that the exact bottom of the market was found on this exact top of US 10-year. You can go look at it yourself. Happened at 12:15. They were 5 minutes apart, actually. This spike in US 10-year caused that drive down in NASDAQ. And then as soon as that top was found in US 10-year, the bottom was found in NASDAQ. So again, nothing is one-to-one or exact inverse or direct one-to-one correlation, but it's close enough to give you clues for confluence and divergence. So that's what we're looking for. when US 10-year is strong, typically NASDAQ's going to be weak and vice versa. So that's how we have to use this data. It's not absolutes. We have a little bit of a megaphone here on the 30-minute on US 10-year here. We need it to find a top so NASDAQ can start bouncing. All right. Man, did I get on a tangent or what? Okay, let's go look at notes since I'm tangential today. Can't talk either. VIX hourly and 4-hour downtrends. As long as that's the case, the market bulls should be in charge. They need to get over 27.47 on the hourly to change that trend. And they're just skirting oversold, which is good for the bears to walk it down. Bitcoin and Ethereum have the same setup. Hourly and 4-hour lower highs are most likely scenario after last night's pump. I know a lot of you are very vested in this. So let's look at it. So on the daily, we're looking for a lower high on Bitcoin compared to 42597. On Ethereum, we got that daily trend change. So that's how they're different. However, we are running into the daily 50 MA and fighting to get over it. So Ethereum is stronger than Bitcoin because we've gotten that daily trend change. Could Bitcoin be a canary, Ethereum be a canary and Bitcoin be a laggard trade to possibly get that bull break? Maybe. But this pullback was so much bigger, so Bitcoin bulls have a lot more work to do than the Ethereum bulls had. So on the hourly, your Ethereum support is 2747. This actually looks very pretty. And is the other question, which is rhetorical, I don't know that we have an answer, but are these moves, are they foreshadowing or predicting what could be happening with our indices? Because this is a pretty move now on Ethereum, and you have support at 2747. And on Bitcoin, you have support at 40521. All right, gold. Gold daily high or low, most likely set. Still looking for a 4-hour lower high. Plenty of room. So what we're looking for on the 4-hour is a lower high. I guess this was the pivot high. Maybe 6-hour is clearer. I had it on 6-hour earlier. Yeah, we're looking for a 6-hour lower high, and it could be anywhere in this area. But the bulls have given themselves enough room for a higher low relative to the FOMC low of 1895. But look at the straight down move. I mean, the gold bulls would have to turn on the turbojets to go get a 6-hour higher high. So if you're bullish gold, just recognize that you may have to sit through some consolidation to get that higher low and determine, are you going to sit through it with a full position or a partial position? Oil got this 6-hour, I was calling it an Adam and Eve pattern this morning in my notes. It has that Adam and Eve bullish reversal pattern. So it's looking great on this bounce, but we're still looking for daily lower highs. It was a beautiful bounce. We had lots of people in our room calling it. Joey called a beautiful bounce. I traded it overnight, actually. I lose my mouse sometimes, so sometimes I pause. Look at the 15-minute holding that 8 EMA. So if you're in long, you have zero reason to get out. I call the EMAs my trade keeper. And if I'm trying to swing something overnight, a few hours, a couple days, I look at my EMAs. Are they holding? And if it's a swing, I want to look at hourly EMAs. If it's a scalp, I want to look at 5-minute EMAs. If it's a sway, a day swing trade, like a little 2 to 3 day trade, then I want to look at those 15-minute EMAs. So oil's looking good and healthy. Daily lower high is still what's on the table. Nat gas, we have inventory today at 10:30 Eastern. And we got a daily higher high, which is super impressive for these nat gas bulls, but we're still in an inside bar. Inside last week's huge range. For me, I still don't have a trade on nat gas. If you've been getting trades out of it, God bless you. I guess you're a better trader than me, but I just can't see the setups clearly when we're weekly inside. So I just smile and wave at it. Elbow, elbow, wrist, wrist. Just wave. Do my pageant wave. Okay, I have support at 4691, 4634. And your next resistance, I'm bringing these levels from over here, 4924, 4936. Queen of the Mountain setups. Okay, it's going to be super repetitive, so don't get annoyed with me. I'm annoyed with me on how super repetitive it is, but I don't know another way of explaining this. So I left some of my notes from yesterday on here because I wanted to show you, these were the lines we talked about. So we talked about a top fish early on, and I was circling this over here. That's what I just erased. Circling that 159.19. This is the level we were looking at. for a top fish level early on, and then a dip buy area at the hourly 50 MA. So I drew this line in rectangle while this was all black before the price action happened. And sure enough, it came back to that hourly 50 MA. To me, this is a beautiful tool to add to your toolkit. Is once you flush the 50 MA and then you make a huge poke above the 50 MA on the hourly, is to buy that first dip back. Of course, use proper risk management, but it's just a great level to buy from my experience. So if we have 4-hour bull flags, then Apple needs to hold 158.01. Okay. Got to stop reading the room. It gets me sidetracked. So RSI, I want to buy an Apple back burner. First Apple back burner at 5 minute, and I may have to wait to 15 minute. When I create these alerts, it doesn't mean I'm going to take those trades. I'm just watching them. And by the way, Denzi will be live in 12 minutes in the TCG room for you TCG members. So the name of the game for me are these big bull moves. So just the anatomy of what I'm doing today. I don't want to delete all this. It's too pretty. But I'm looking for that 4-hour bull flag dip buy. And if I miss that, then I'm going to be looking for 5-minute back burner. And if they happen to have a confluence, that's even better. Amazon. So if I were you and you trade Amazon a ton, I'd go put this on my chart, 20950. $5 billion dark pool print. That becomes a key level. And I get asked this question more often than any other question. Well, what do you do with that information? I use dark pool print as synthetic support or resistance, meaning if you paid $5 billion to enter Amazon at $29.50, and then the bear folks bring it back down to $29.50, don't you think you're going to defend that level? If they got $5 billion, I'm assuming they have a few more dollars to throw at it to defend $29.50. That's how you use dark pool. However, if we were to break that level as through support and we'd come back up to it, that could be a level where people sell into it. And the same people who bought it say, well, crap, if it wasn't worth $29.50 when I bought it, then I'm going to sell the crap out of it when it comes back up to it. So just think of it as synthetic resistance or support, those dark pool levels. And so again, here's my two-pronged approach. Today, back burners on all big movers from yesterday, and that's 5-minute oversold. And then I'm looking for the 0.382 retrace area for 4-hour bull flags. That is my MO today. And I type these things out. I don't mean to act kindergarten on it. It just keeps my brain straight as to what I'm trying to tell you. So on Amazon, that would be 302428 would be that bull flag area. So here's the Queen of the Mountain setups if you want to take a screenshot. So I typed in the actual area that would keep it a 4-hour bull flag alive. So let's just rip through it and then we can go look at the charts. But Amazon, the trade setup, back burner, potential 4-hour bull flag, looking at this 3022, 3024. So here's the 3024, the 0.382 retrace, and then that morning high 302264. That's why that came into the picture. AOSL. This is a very unusual name. I've never traded it before, but it really stood out to me yesterday. It's daily chart. Let's go look at it. Look at this daily bull break. A clear downtrend resistance. And not only did it break the daily 50 MA, it did it with force. Semiconductor 11% move. It's opening up a little bit down this morning. I think that's great, and it could give us a dip buy opportunity. 0.382 would be around 52.48, and I definitely want to set that back burner alert. Tell me when it gets to 30. Baba, what a move. Baba, 0.382 would be 52.48. I've already set this back burner alert. 52.48 for that 4-hour bull flag to be alive, to be in play, and or the first 5-minute oversold. Okay. CSX. I know I have notes on this chart. Where are they? Okay. Upgrade this morning. We got a daily trend change yesterday. Oil is bouncing beautifully overnight. And then this name has those big buybacks, huge buybacks. So I like CSX to the long side. I like a pullback to these hourly EMAs, or you guessed it, back burner. We have a daughter who, when she's gullible and we get her on something, she's like, oh my God, I hate myself. Well, that's how I feel this morning. Oh my God, I hate myself. Stop saying back burner. Stop saying 4-hour bull flag, but I can't. That's just what the setup is. Facebook, potential 4-hour bull flag. We just popped on that broker open. I'm disregarding that. 20108 would be that 4-hour bull flag area. Go set that alert. And these alerts may not yield what we're looking for as far as a trade, and we'll just look, pass it up. If the market's pulling back hard, we don't want to fight these back burners and go long if the market's going up. NIO is a little different. You see how it's pulled back to the 0.618? It's given up a lot. That is different than the other names we've looked at. Baba, Amazon, Facebook. It's pulled back a lot. So this one's a little different. This one, I would look for a top fish of any of these pre-market highs or yesterday's high of 1877 or 1936. It may provide a top fish. NIO is pulled back way more than anything else. So this one is not like the other ones. NVIDIA, what a bull push yesterday. Great double bottom buy area, 0.382-24141. Looking for that 5-minute. Wait, that's not what I want. 5-minute oversold. Okay, and then finally XBI. XBI has this potential daily falling wedge, but I view XBI as a laggard to the rest of the market. It had a almost 5% bounce, which is really good for XBI, but it still has work to do. So I'm looking for a pullback buy to try to nail that higher low and possibly swing a very risky instrument, Labu, 3 times XBI for a potential swing to nail the bottom of this falling wedge. So this is one of my Queen of the Mountains. So the top fish one that I have is NIO, and everything else is bullish, but it's bullish within context. I won't pull back bullish. I don't want to just buy bullish right here. So Christoph, let me look at silver. Y'all got a lot of silver conversation going on this morning, so let's look at it. On the weekly, we touched the 8 EMA and we got a long lower wick of bulls buying the dip. That's healthy. We still have this squeeze going on, meaning the pressure is just now getting released on silver. You see these two, let me double click on this real quick. You see these, well, 3 blue cyan, I think is the color. You see that? That is a bull firing. So this is the momentum histogram. This is the momentum histogram. This is the 0 line. When you have bars above, that's bullish. And when you have the Burger King colors below, that's bearish. Bulls have taken over this chart. Obviously, we got a weekly bull break. This is a bullish chart. 4-hour got oversold. That's typically where we look for a weekly higher low. Let me say that again. We're looking for a weekly higher low. Plenty of room for it. And the best place to go digging for the Easter egg hunt for a weekly higher low is on 4-hour oversold, and we got it. So now we wait for a 4-hour higher low to bottom fish that weekly higher low. We got the hourly, and we may have to wait for, y'all see that? Look at that, 50 RSI holding. Love that trick. We're holding those EMAs. On the 15-minute, we have a downtrend. So we may have to wait for the 15-minute to change the trend back to the upside to try to nail that weekly higher low. Yes, it's different than MACD. It has nothing to do with MACD. Here's a fun tip. MACD, if you add that down here, it's a duplicate of your EMAs. If you use 12 and 26 EMAs, that's the same as MACD. The MACD lines are just the 12 and 26 EMAs, and it's just another panel on your screen. I ain't nobody got time for that. I don't have the real estate for more panels. Thank you for that, MG. Wave, I appreciate you. Okay, Wave wants MSOS, and then I'll wrap it up. Dan established a position yesterday in MOS, attempting to nail this bottom, looking for later in the year bullish action. Your next resistance is 1950. So your best bet is, your first best bet is 5-minute oversold. So if you missed Dan's trade yesterday, which I saw it and I didn't take it, but I'm interested in it, then I'll just wait for 5-minute oversold. I don't have to chase this up here. Wait for a pullback. Your first support on the 15-minute is down at 1807. Let's look at it from perspective of what I told you was my favorite trick is when you push up through, I hate myself, hourly 50 MA and you pull back to it's typically a good area to buy. So if we pull back to the hourly 50 EMA again, or in the hourly 21 EMA vicinity, that may be a good area to buy. You're welcome, Blue Dog. Not necessarily, Ricky. It is not a one-to-one. It's not like that. Silver and gold are not necessarily always inverse to the market. CRM, and I think Ricky had one, and I want to help Ricky with whatever he needed. You're short from the 20 SMA. This is a bull break. So we got a daily bull break, 204.77 by $1.13. That is convincing bull break, and we have a squeeze. Right here, the 50 RSI may serve as a daily short resistance. So on a pullback, I would be careful. I would start covering that short because the bulls have taken over this chart on the daily. And then Ricky, let me see. You have a good day. Let me see if I can go back and find Ricky's real quick. IYR. Real estate ETF. Okay, let's look at it on the monthly. Monthly inside bar. Wait, let me go back. We're in a monthly lower low situation there, and we have a potential weekly bear flag. Daily double top at 104.58, 104.94. And remember, people run to real estate when they're scared of the market. When they're slightly scared, they run to real estate so they can get those dividends, and they run to utilities. When they're really scared, they dump everything. So this is a hedge risk off typical ETF. Really rough. We just have the squeeze forming going sideways. 104.94 is key resistance and key support, 101.41. All right, that's it for me. I appreciate y'all listening. Hit that like button. No, you're the bomb wave. Everyone be safe. Use stop losses. Much love over here. Hit that subscribe button too.